I think there are a number of favorable developments that will continue to make China a big investment opportunity. Our business in China is driven by two factors. The first one is China has an emerging middle class that has a huge size. And that emerging middle class will continue to look for investment opportunities, both domestically but also internationally. The second factor that makes China attractive is that China has now committed over the next 5-year plan to a continued opening up.
Interest rate levels in China are simply higher than we see it here in the Western world, and I think also as the opening of the China capital market will continue, you'll see very meaningful capital inflows into the credit and the bond areas in China.
In a way, good medium long-term reason. It's a strategic overweight, and China equities will come back at much higher levels in a kind of rational exuberance, because finally investors will realize that it's a much better risk-adjusted proposition.
We continue to be quite involved in the Chinese corporate bond market. The Chinese government bond market looks quite attractive on a relative basis at the moment. So China as a country, Asia as a region is critically important to PIMCO, not only from an investment perspective, but also meeting new investors.
Indexing will have a major role in China, but it could take a number of years as the market continues to develop and have more of an institutional presence that you start to see some of the true benefits of indexing take hold and gets recognized.
I think the underlying issues that I think the Chinese regulators are getting at are actually quite consistent with some of the things that are going on in other developed markets, whether it be US or Europe. As you think about the effects of Amazon or Facebook or other very large dominant technology companies and the impacts there are for smaller startups.
In fact, regulatory changes cause investors to pause everywhere around the world, in Europe and in the US as well. In this context, a lot of what is happening in China at the moment becomes far more understandable. The large majority of our clients have clearly maintained their investments with us, and like us, they really believe in a long-term commitment to China in their portfolios. So nothing's changed there.
So we have evolved towards those companies that are serving more and more of the population in China. So tier 3, tier 4 cities and beyond. They might have lower margins, but their volumes will explode.
The China growth story from here and forward will be much more focused on technology, artificial intelligence, robotics, if you will, even winning the race on tech sources will certainly be something that are very interesting to look at in China.
You're having this explosion of biotech companies. Then you need the combination of venture capital, you need centers of excellence like you have in Pudong, for example, and you need government policies that incent innovation. And I think you have that in China, and so you really do have the potential for a large number of biotech companies.
There's going to be a massive transformation of the industrial economy in China. There are some obvious opportunities there around alternative energy, but some less obvious opportunities around the supporting infrastructure that's going to be needed, the industrial change that's going to be needed, and the changes to the transport sector. So I think it's a great example of where ESG creates opportunity.
I'm bullish on the continued growth of China. I'm bullish on the growth of the world economy. So I think commodity-related investments, which have been very out of favor, are having their day in the sun.